Hello everyone. Welcome to Rajeshwari's Commerce and Management Study Hub. I am Rajeshwari here. Let us understand today about the cost of goods sold, why it has been calculated and how it has been calculated. Now if you take trading account, why we are preparing the trading account? To know the gross profit or gross loss, right? And what you are recording in the debit side and credit side, it is also called as T form account because it will be prepared in the ledger form, right? Now, if you take debit side, all the expenses you are recording. When it called as expenses, not all the expenses are recorded, only the direct expenses which has been incurred during the conversion of raw material into finished product or to bring the goods to the place, it will be considered, right? Now here the name only says cost of goods sold. Whatever goods you have sold, that cost will be called as cost of goods sold, and it is the total cost of goods whatever the company sells during the year, during the specified period, accounting period. The formula to find out the COGS is opening inventory plus purchases plus direct expenses minus closing stock. And let us understand why these three will be added and why this closing stock will be deducted. Now, opening inventory. The name only says whatever stock available at the beginning of the year, and this will be sold at the end of the year. So that is why it will be added. It will be added. Whatever available in the beginning of the year, by the end of the year, during the year, it will be sold. That is why this cost will be added. Purchases. Purchases is goods whatever you have bought during the year. Again, and these goods why you are bringing? For the resale purpose. For resale purpose. That is why it has been added. Direct expenses. Here, expenses means the expenses whatever you have incurred for the conversion of raw material into finished product and bringing the goods to the business. The examples of direct expenses are freight, carriage inward, import duty, transportation. So these expenses increases the COGS, cost of the goods. Cost of the goods, it increases. That is why the direct expenses will be added. Closing stock. This is the stock remain unsold during the year. In the accounting period, this remains as unsold. That is why it has been deducted because it is not the part of the COGS. As I already said, the closing stock is the unsold stock left at the end. Because of that, it will be deducted. So, what is the formula for COGS? Opening inventory plus purchases plus direct expenses minus closing stock. I hope all of you understood. Thank you for watching. Have a great day.